All right, guys, what's going on? Hope everybody had an awesome weekend. Excited to get this video out for you. So I'm sure that many of you saw the tweet that I put out this past Saturday. I'm asking you guys if you'd like me to make a new video. And the general concept is just catching you guys up on my trading, the adjustments I've made to the system, what my trading is looking like right now. And so that's what we're going to do here. So first off, guys, the system movement has really started to garner a lot of traction, and it's very, very exciting. And I love all of the support that I'm getting from you guys. And that alone, I'll say, is very rewarding. And it does mean a lot. It doesn't go unnoticed. You guys are a really big reason why I'm able to stay motivated and continue to do this. So with that being said, some of the ways that you can support, first off, please follow Master B Jones on Twitter. Again, he's the original creator of the system. As you guys saw, I got the chance to actually meet up with him in New York a few weeks ago. We got dinner. It was an awesome conversation. And so I'm looking to plan to do some things with him regarding the system moving forward. So that's number one. Number two, if you guys could subscribe to the channel, that helps us out a ton. And then lastly, follow me on Twitter at DwyaneTrade3. Again, just showing support. Really appreciate that. Helps to spread the message. So guys, again, in my tweet over the weekend, I asked you what exactly was that you wanted to see. And so we're going to go through 4 main topics during this video that I think are going to help you guys a lot and just kind of clarify some of the main questions or common questions that I've been getting in regards to what my trading is looking like and what I'm doing and how I'm using the system to be profitable. So let's get into it. So number one, the main question, or one of the most common questions, and it's more of like a general concept, is what are my rules and what do I look for entering a trade, exiting a trade, and for taking profits? And so the first thing that's very important to understand, it's not black and white. The way I trade may not be the way that you trade. We're going to use the same system and we could use the system to be profitable, but there are, of course, many different ways to use it. And so I've adapted it. I'm trading it in my own way. Trader B Jones uses it in his own way. People in the Discord are making adjustments to it constantly, using it in their own way. So again, you don't have to trade the way that I do. And it's important to understand that the general concept of entering, exiting, and taking profit is unfortunately not black and white. And that's something that every trader struggles with for the entire duration of their trading. When to take profits? What's the best way to do it? When should I be exiting the trade? That's part of trading. And so as a trader, you have to be dedicated to putting in the time and trading it on your own. But of course, I'm going to tell you guys exactly what it is that I do. So number one, it's very important for me to have a clear-cut level that I can risk off of. Now, when we're using the system, and we're taking a look at this 30-minute chart where we have the 50 SMA and the 10 SMA, I can use these moving averages as levels to risk off of. And what does that mean? For example, if I'm looking to go long on a break over the 50 SMA, meaning that the tide is kind of shifting and that momentum is now with the bulls, because we know that below the 50 SMA, we look to short the pops. Above the 50 SMA, we look to long the dips. So many people ask me, do you wait for that buy signal when you go long, which is the cross of the 10 and the 50 SMA? The answer is no. And the reason is because I like to anticipate that cross. So think about how moving averages work. They're lagging indicators, okay? They're not necessarily predictive, but what we can do is predict where price is headed based on where we think those moving averages are headed. So if I can tell by watching the 50 SMA, the break over the 50 SMA, if I can look in that and say, okay, if price trades above this 50 SMA, we could get that buy signal later in the day. I'm going to look to enter right at the 50 SMA because I have a clear level to risk off of. And again, what does that mean? Let's say I go long here at 36.07, 36.08 when the 50 SMA is at 36.05. Looking at this day right here, this past Thursday. Rather than waiting for the confirmation of the buy signal, to me, it makes more sense to go long on the break because if I go long here, I could risk 5 to 10 points, because if we come back below the 50 SMA, I know that the idea is wrong. So that's very, very important. So I can clearly risk here. Okay, I want to go long with the idea in my mind that if we stay above this 50 SMA, we could trade higher into the rest of the day and get a buy signal. And if we come back down below it, well, then my idea was wrong. It was a fake out. That's fine. I could quickly stop out knowing that, okay, if we're below it, the idea was wrong. The problem is now, if you wait for that buy signal, what happens when you're up here? This is actually a perfect example. Let's say you go long on this buy signal. This 30-minute candle actually sold off. So here we have a 20-point drop, 15-point drop in this candle alone. And so if you're long, you see the buy signal, you know that you should be long, you know that there's a good chance that we're going to trade higher. We're above that 50 SMA, but now you're worried about, okay, when do I exit the trade? Because you didn't have a clear level to risk off of. There's nothing here because your next biggest support is going to be either the 10 SMA or the 50 SMA. And it works the same exact way to the short side, guys. You can risk off of this 50 SMA. If it breaks back above, you can exit the trade, but it makes it very clear, right? And there are times where I have to try it 2 or 3 times because you're trading on that 30-minute chart. So the 30-minute chart is going to be telling you one thing. The 5-minute chart is going to be telling you another thing. So it can be tricky, right? Let's take a look at this candle, for example. Let's say I go short and I want to risk 10 points. Because I know that if we break back above the 50 SMA, the idea was wrong. Well, unfortunately, in this scenario, we broke above and then came right back down. So it was a fake out and it was a wick. So with the 10-point stop, I would get stopped out. So in that case, I might have to go in and try the trade again. And again, if I still feel comfortable that the idea is going to work, because again, if you can keep that loss small, the winners are going to make up for that loss. That's one way to play it. Another way to play it is, okay, I might give myself a 20-point stop, a 25-point stop, and I'll just size down. And that'll really give you time to let it develop. So now let's talk about taking profits and when to know or how to know when to exit a trade. And again, guys, going back to that, this isn't black and white. It's something you're always going to be working on. It's part of the game. For me, it's something I'm always looking to improve. Every trader struggles with, when should I take profit? Do I let things run? Do I trim early, right? Something that you're always going to be dealing with. But in general, this is how I've been trading the system. So let's say I go long over the break of this 50 SMA. We'll use the same example. When I'm entering a trade, I always have a target, okay? So I'll have that main target where I see my first major level of resistance. Now at that major level of resistance, I'll take a little bit off, right? I'll trim some of the position. And then what I do is I will trail stops on the remainder of the position, okay? So keep in mind, guys, I'm trading the futures, so I don't have to deal with things like theta. I don't have to be right on the timing. I don't have to worry about, the expiration date of my options contract. So I'm simply trading the price action. I'm simply trading the chart. So if I go long, and let's say my first target for whatever reason was up here, 3670 SPX, maybe I'll take some off. And the reason that's so important is because, okay, when I enter the trade, I want to have an idea of where I think this thing could go. And once it hits that major level, I know that there's a good chance to pull back, but it can pull back and continue. But the only way that I can stay in that move, if it pulls back and goes higher, is if I take some of that position off, because that way I can withstand that volatility. Because what happens when you're in that full size and, SPY drops $2 or SPX drops 20 points? Well, now you're getting nervous that you're giving back too many profits, right? But if you took some off, then you feel comfortable. Okay, I lock some in. My position size is smaller, so the dollar amount, the P&L isn't moving as much, which is important for me mentally. Now, talking about P&L, I think it's very important to do your best to not focus on the P&L. That's something that I work on. So, if we're getting this big move higher, I'm going to see myself making a lot of money. And my instincts are going to say, take some off, lock in some profits. But what I'm doing here is I'm trading a system. I'm not trading based off of the actual money that I'm making. So if I have an idea of where something can go it's very important for me to let the trade play out and then to take profits when I feel comfortable. But of course, if I'm up 30, 40 points in a trade, I definitely don't want to let that go red. And I definitely want to at least, if it completely reverses, make a little bit of money. So I'll trail those stops, and trailing stops are very important. So again, after I take some profits, or as the trade is moving in my favor, I will trail stops up. And a lot of people ask me, well, how wide of a stop are you using? How much room are you giving it? It's based off of the move that I'm anticipating, guys. So let's say we're coming up to a major level of resistance. We'll use this 37 or 3670 SPX level again as an example. If that's my main target, then I think, at that point, I've gotten a really good amount out of this trade. And for that reason, I'm going to keep a tight stop once we hit that level, because I think at that level, we could see a big reversal. Now, if my target was 3670 and we're down here at, 3650, I might keep a 20-point stop, 25-point stop. The reason is I want to stay in this trade for as long as possible. I want to withstand as much volatility as possible until I hit that target. Now, the last thing I want to talk about when talking about actually entering a trade, something that I tweet about a lot, and I know that you guys are starting to think about this the same way as I am. I want the 30-minute SPX chart and the 1 hour or the hourly SPX chart to tell the same story. So let's run through some examples here. Let's look at this major downtrend that we saw after this sell signal, right? Break below the 50 SMA. We could see that price was below the 10 SMA on the 30-minute chart. Let's take a look at the hourly and see what it was telling us. Here we can see that the hourly told the same exact story. We got a break below the 50 SMA and that 1050 SMA bearish cross. So for me, that was an extremely high conviction trade because the two time frames are telling the same exact story. So why is that important? Well, there are going to be times when the two time frames are not telling the same story. For example, I want you guys to first take a look at this chart. This is the hourly where we got a sell signal. We got that 1050 SMA bearish crossover. Now we see how price was unable to break above the 50 SMA for the duration of this move until, of course, finally it did. But now let's take a look at the 30-minute chart and see what story that chart was telling. So now this is the 30-minute chart, and what do we notice here, guys? We got multiple fake outs on the 30-minute chart, and the reason for that was because it was not telling the same story as the hourly. Here on the 30-minute chart, we got this break over the 50 SMA. We got a buy signal. But remember, on that hourly chart, we were below the 50 SMA the entire time, right? So we want those two charts to be telling us the same story, and that would provide a high conviction trade. Now let's look at an example of that. So here's an example of the charts telling the same story where we got a break over the 50 SMA and buy signal on the hourly chart. Okay, so remember what this looks like. And now let's go to the 30-minute. And now on this 30-minute chart, we got the same thing. We got a break over the 50 SMA and that buy signal. And you could see how large of a move this gave, right? That's a perfect example of the two charts telling the same story, resulting in a really good opportunity to trade. Okay, so now we're going to move into our next bullet point, our next topic, which is how do I manage risk overnight when trading futures? I get asked this a lot. All right, so now we're going to move into our next topic, and for this, we don't need a chart. And the question that I've been getting a lot is how do you manage risk overnight when you're trading futures? Because obviously futures trade 23/5, so there's price action overnight outside of 5 to 6 p.m. Eastern time. And so how do I manage my risk there? Well, it's like anything else, realistically. I keep a hard stop in no matter what. So when I'm going to bed, I have that hard stop in case some crazy news comes out. I don't want it to go against me, right? So that's how I, quote unquote, manage my risk. Now, the trade can go in your favor overnight. So what do you do when it goes in your favor and, you're not watching the price action because you're sleeping? I use what's called an OCO order or a bracket order. So when I go to bed, I'll have, a price target in my mind, and I'll simply put it in a limit order that allows me to take a little bit of profit or all profits, depending on how I plan on trading it at that price level if it were to be hit. And on the other side of that is I have my hard stop in case the trade goes against me. Or, if I'm already in profit, I'll keep that trailing stop in so that, I don't wake up and all my gains are gone. So very simple concept there, guys. Using hard stops when trading overnight is very important. Okay, now the third thing that I want to talk about, and the third most popular question, is how do I avoid fake outs? Number one, guys, it's important to understand that fake outs happen. It's part of trading. As long as you're managing your risk and your winners are bigger than those losers, you can quickly outweigh those fake outs. It's very, very frustrating, but unfortunately it happens. But I do have some tips on how you can potentially avoid them. And one of the main things that I already talked about was making sure that that hourly SPX chart and the 30-minute SPX chart are telling the same story, because again, we went through that example where we were getting, buy signals that were quickly turning around. Let's even take a look at this one, right? So this past Thursday, we got this buy signal, and it's all happy-go-lucky, and you think, oh, we're just going to keep cruising into the next day. But if you would have looked at the hourly chart, you would have seen that we broke down below that 50 SMA the next day, that next morning, right? So as soon as you break down below that 50 SMA, although we hadn't broken down on the 30-minute chart quite yet, you can look at that and say, okay, the two charts are telling a different story now, right? So it's no longer as bullish as the system may make it out to be, which is why it's so important to use these two time frames. So if the 50 SMA would have held, perfect. We would have seen continuation. It didn't. And then that's when that light bulb in your head kind of goes off and you say, okay, let me back off here. I need to be careful because the charts are telling two different stories. Let me wait for things to clear up. And then that will make more sense to me as a trader. It will clarify things and I won't have to be guessing as much. And, I won't be as prone to fake outs, right? And so using the two time frames is very, very important to avoid those fake outs. And the last thing I will say as far as avoiding fake outs, a lot of times we'll get a buy signal or sell signal into a major economic event or a data release. So going into these events, I always like to be all cash, and then I like to react to the move. So the market is going to show its cards, and then we can look to play in the direction that the trend is already headed versus, we get a buy signal into big data and then it quickly reverses and you're like, oh well, the system was telling me buy signal. Guys, the system is phenomenal, but no system can predict how the market will react or digest information that it is yet to learn, right? So I love being all cash into those economic events or data releases. I think that's very important. For example, FOMC, CPI, those are two major ones. Always like being all cash despite what the system is showing. Now, the last question that I want to cover, why and how do I trade ES when the system is based off of SPX? So if you guys have watched the other videos that I've done, at the end of one of those videos, and it was one where I was just going through some trade recaps and I covered a really nice winning trade that we had with options. I said at the end of that video that I was going to start dabbling with futures, and the reason is because I realized, okay, the system is so good at predicting what can happen next. It allows me to predict what can happen next. I just don't know when it's going to happen. So having to time the move is what was becoming very difficult. Now with options, of course, you don't deal with the Greeks. So you don't have to focus or worry about that as much, which is why I started trading futures. So I'm simply using ES as my vehicle for trading SPX. So a lot of people ask me, do you use the system on ES? There's all these, there's bullish crosses. Guys, it's way too volatile. I mean, look at this ES chart, right? Look at how many crosses you have here. It's way too volatile. So that's why I just stick to SPX, and then I use ES as my vehicle to trade SPX. And that's simply because I don't want to deal with theta. I don't want to deal with that time decay. I don't want to deal with the Greeks, right? I want to trade the system in its purest form, and futures allows me to do that. So I don't use the system, that 1050 SMA itself, on ES. I simply use ES as my trading vehicle to trade the SPX chart. All right, guys, that's it for this video. I really hope that you enjoyed it, and I hope that this was helpful. Again, the support I've been getting has just been phenomenal, and it really makes this a lot of fun for me. And it is very, very rewarding to see you guys using the system and making money, quite honestly. It's crazy. For those of you that don't know, I live trade every day, all day in the Kane Capital Discord. So many of you have been DMing me asking me, what's the best way to learn the system? I'll be honest, I think that is one of the best ways, would be joining the Discord. And the reason is because I simply talk through my thought process. So I love making these YouTube videos and these instructional videos, but there's a lot of value in simply listening to someone talk through what it is they're watching. So anytime I take a trade, it's not just alerting the trade, it's this is the trade I'm taking, this is what I'm looking for, this is why I'm entering, why I'm exiting. And so I think that alone provides a lot of value. So if you're interested in that, you can find the link to join the Discord in the notes of the video. Would love to have you guys come trade with me. The community is awesome, and I think that you guys would really enjoy it. And as a matter of fact, if you are interested, shoot me a DM at Dwyane Trade 3, and I'll hook you up with a special discount code since you took the time to watch this video all the way through. But that's it for me, guys. Really hope, again, that you find this to be valuable. If you did, like, subscribe, and I'll see you guys on the next video.